Let me ask you guys a question. Do you know what goes into developing a successful trading strategy? Odds are you probably don't. Most traders were like me at the beginning of my trading career in thinking that it was as simple as browsing the internet, finding a video with a lot of views, right? The first one that YouTube points in your direction, and simply copying them, right? Writing down what that person is doing, putting it on your own charts, and doing the same thing. Sound familiar? In fact, I would even argue that many of you wouldn't just copy, but you'd copy it and then you change something around, right? That way it can really feel like yours and feed that hungry ego. Actually, my best friend, the guy that got me into Forex trading, I used to be a stock trader, I went over to Forex. He was the same way. He was this brilliant developer. He would find things on the internet. He would systemize them and make them work. And then he'd basically self-sabotage because he felt guilty about trading someone else's system. He would have something that was very profitable, but he'd be like, nah, I want it to be mine. And he would change it and would be less profitable. So for you guys that don't believe that the ego plays a role, it does for many traders. And this is one of the reasons why win percentage is such a big deal. A lot of traders would rather win at a very high rate than actually make profit because winning makes them feel like they're better or doing something different. But anyway, in hindsight, right, it's really a ridiculous assumption that it would be that easy to be a successful trader, develop a successful trading strategy, right? Seeing that 90+% of all traders fail, why would we think it's realistic to simply find the first YouTube video, copy it, and make money right away? But we're fed with all this get-rich-quick nonsense, right? It's ingrained in our cerebrum, so we believe it's true. The truth is that developing a trading strategy takes a massive amount of time and a massive amount of effort, and the majority of that time is basically spent finding out what doesn't work. I think it was Thomas Edison that said this. I may have the quote wrong, but he said when creating the light bulb, he said, I have not failed. I just found 10,000 ways that didn't work. And that's very, 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 very true. And that's really the process that I'm going through right now, and the process that I always go through as I kind of dig into the markets and just look to learn, right? Each December, I typically dedicate a few weeks to what I call continued education as a trader, right? In any business, continued education is important, right? In my other businesses, I'll go to seminars and webinars. In trading, I'll read books. Sometimes I'll take training courses. I'll do all types of stuff, but I try to dedicate at least, a few weeks at the end of the year, typically because that's the only time I have free, to continued education. And this year, that continued education is going back into strategy development, right? Last year, I had the same goal, and I actually did a series called the Strategy Development Diary for the traders on the Tier 1 platform, where I was walking them through kind of the live process of creating a strategy where, you go through the initial testing and the eye testing and developing the hypothesis and then testing that. And the strategy didn't end up working the way that I wanted it to, but there was a great amount of feedback from the series because the traders loved the process. They didn't really care about the end result, right? That's a little bit of the difference between the traders that we work with and the majority of traders out there, right? I know a lot of people would be like, oh, it didn't work, you're a loser. The process was what's important because if you understand the process, eventually, like Thomas Edison, you'll keep trying and failing, and you'll find something that works. But this year, again, I wanted to dig back into a strategy because I look at my trading as being like businesses, right? I'm a swing trader, I'm a day trader. The day trading is kind of like I don't want to say fun money, but that's kind of the fun money. The swing trading is my midterm trading. That's the way where I just want to accumulate the account size and keep it growing and never touch it. And I would love to have something on the daily time frame, something I can literally come in and check once a day, more of a long-term strategy, preferably a long-term really trend continuation strategy, since that's something that is missing from my portfolio as I'm mainly a counter trend trader. I kind of like hedging myself and whatnot. And it also works great for the traders that we work with on the platform because many of these aspiring traders are still working 9 to 5. They don't have a lot of active time to sit in front of a chart and watch the market. They may not even have time to kind of go to a computer or their smartphone every 4 hours and check a price quote. So I thought it'd be cool to give them something where they can literally come in once a day, end of the day for me in the US at least, check something and set up their trade and then be done with it until the next day. The bigger picture, it's also my scheme of slowly getting out of the market, right? I got into trading in the first place for freedom of time, right? I didn't want to be locked into a 9 to 5. I didn't want to have my basically money tied to the amount of time that I'm doing a certain task. And I love what I do. I enjoy trading. I enjoy coaching traders, but I'm not going to do this forever. All right. So eventually I'd love something long term, because long term, again, I can free up my time and I can continue to do whatever I want during the day. So my long version of saying I'm looking for to add a different strategy to my trading arsenal. And this one specifically on the daily charts. And when I started this in early December, I had a pretty clear idea of what I wanted to do. And this is based off some of the data that I gained from last year's testing. But as I tested and failed and tested and failed and tested and failed and tested and failed and tested and failed, I ended up in a completely different place than what I thought. And again, for you guys on the platform, we did kind of 2 mini strategy development diaries earlier in December, when I was using Bollinger Bands and I was looking for this and that. All of that is completely done. This testing led me through a completely different route. And what I love about manual testing, let me say it again. What I love about manual testing, right? Not automating it and having a scanner run through the market. What I love about manual testing is that essentially what you're doing is you're going through years and years of data, right? Is that while you're doing this, it's basically a constant observation of the market. You're seeing how the market performs. You're looking at different tendencies. You're seeing different market conditions during different times. And all of that is knowledge that's going into your brain that could be used for later, right? You can stack it away somewhere and pull from it at a later date, right? And because I've been able to make these numerous observations on what I thought I wanted to do, it kind of transformed that into what I'm currently doing right now. And I guess taking a step back to the process, right? When testing an idea, right? When testing or developing a new strategy, and I say new strategy, there's nothing really new out there, so I don't really mean like new, meaning I'm the only one ever to do it. But when trying something different, right? You're taking different moving parts and you're putting them together in a specific way that fits what you want to achieve. Right? When testing a new idea or new strategy, I always start off with a very general hypothesis. So, what do I want to do? Simply, if this happens, then the market should do that. And then I followed it up by running through a very general test. And I call this test a baseline test. I don't know if that's the right word for it, but I always call it a baseline test because it's what everything else is going to be based off of. And at this point, I don't really care about optimizing the strategy. I just simply want to see if the idea works. And if it does work, I want to ensure that it works in the way that fits what I'm looking to do. For example, last year I was playing around with an inside bar strategy, and I actually got it to work, but I was looking for something that I can check once a day on the daily. It worked, but on a lower time frame, using the daily and going down to the 4 hour. So it was a strategy that worked. It just didn't work the way that I want to use for my trading. So it didn't fit my goals. When I did the initial testing of the first idea I had for the winter, I actually did get that to work as well. However, in order to get it to work, it came with having a win percentage that was in the 30s. Now, you guys have, if you heard the Trading Coach podcast, you probably heard in a very early episode with embarrassing intro music that was titled "Who Gives a Boop About Your Win Percentage?" Because win percentage doesn't matter. As I mentioned earlier today, a lot of traders are caught up over I need this high win percentage to be a successful trader, and that's just not true, right? Some of the best traders of all time, especially if you're going to be a trend trader, a lot of them win between 20 and 40% of the time. Go do some research on Richard Dennis and the turtle traders and check out their win percentages. very frequently had to suffer through 17 plus losses in a row to get that one win. Obviously, the losses are small, the wins are big, and it made up for it. But very, very low win percentage, very, very successful traders. However, for me, 30% is below my comfort level. And this is the part of trading that people don't pay enough attention to, right? And even my mentor was like this. I think I kind of influenced him a little bit, but he was military, very high discipline. If you're very high discipline, you can do it. Where he's just like, I don't care about it. I don't care about the win percentage. I don't care about how you feel. Do what works. If it works, do it. If it means 20%, do it. And that makes perfect sense, right? At the end of the day, profit is king, right? Does it make money? Yes. If it makes money, then do it. But going back to that 90+% of traders fail, the reason that so many traders fail isn't necessarily because they can't trade. Again, it's because of the psychological issues. And my philosophy as a coach and as a trader has always been this, right? Avoid situations where you're going to get into trouble, right? Maybe that's growing up in Philadelphia, PA, and being paranoid of everything, but avoid situations that are going to get you into trouble. If you know this nightclub has a bad reputation for people getting mugged and shot and stabbed afterwards, right? If you were to visit that nightclub, you put yourself at a significantly higher risk of being involved in that situation. However, if you do not go to that nightclub, I don't want to say you're at zero risk because anything can happen anywhere, but you're much less likely to be a victim of whatever happens that night, right? Does that make sense, right? Avoiding a situation that can get you into trouble is the easiest way to stay out of trouble. So if you know that you're going to become a mental mess if you're winning at 30%, if we just make it on a very small basis, 30% is 3 wins out of 10 trades, right? If you know that by the time you take your 6th loss in a row, if those psychological demons are going to start sneaking up on you, you're going to start being scared to enter a trade, you're going to start moving stops back, you're going to start taking targets early, right? Don't put yourself in that position where you're likely to make that mistake. And again, some people are very, very disciplined. It doesn't matter for you guys, hats off. But most people aren't that disciplined. Most people aren't disciplined at all. But most people are disciplined to a certain degree. And that's how I personally am. So I know that anything under 40%, and this is just from being a trader for, way too many years. That was it, 13 years? Gosh, 2007 I started, 2008. Sheesh, I'm old. This comes from just personal experience of kind of knowing where my boundaries are. I know that 40%, once I dip under 40%, that's when I start kind of questioning myself. Does this really work? Has the market changed? Is it dead? Blah, blah, blah. And that's when I kind of those cracks start developing, where it's like, should I really take this? And I like to think now I'm very disciplined. And I won't do that because I trust my plan and my system. But again, you just never know. But I want to avoid that situation. So although winning at a 30% clip was the most profitable way I had to strategy trading, I just knew that it wasn't doable, especially on a daily time frame where you're only getting maybe per pair, maybe only 10 trades a year. I think it was 10 or 12 trades a year. So essentially that could mean going from January to September without a winning trade. And that could be very, very difficult to do. So it just didn't work the way that I wanted it to work. But again, although I couldn't find a way to make it work the way that I wanted to, the process of going through all of those years of back testing and failing and testing and failing and testing and failing and testing and failing and testing over and over again allowed me to make some observations, allowed me to write notes throughout and pull from the notes and see some things that I really did like. And what I ended up doing was I started venturing through those kind of secondary ideas, first seeing how they worked with the original idea and then eventually even annihilating, that's the right word, scrapping the initial idea and just going with the secondary idea. And what you see in front of you right now, this is an equity curve from an initial baseline test that I did on the latest idea. Now this is over 2009 to 2019, so 11-year period. This is only on a single pair, right? For you guys that are new, right, you want to test on multiple pairs. I've been having a lot of conversations lately because a lot of traders that we're working with are spending this time to back test and staying away from the market about how do I handle a situation if a pair has a losing year during the back testing? And we talk a lot about creating a portfolio of pairs that kind of hedge each other, where instead of just putting all your eggs in a single basket of trading one pair, you trade multiple pairs, not only to increase the frequency of your trading opportunity. And if you have something that has a positive expectancy, then more frequency is good because you're executing your edge more and more and more, right? It's like the casino, you are the casino. It's like you're flooding more people into casino. That's the whole goal. But it also hedges its bet a little bit. Going back to the casino reference, right? If you have someone that has a big night at the blackjack table, right? And they're taking you for your money, they're taking the casino for its money. Well, if they were the only person playing, that would be bad, right? However, there are thousands and thousands of other people playing and they offset those costs, and having a portfolio is the same way. So it's very important. You don't necessarily need to scrap a pair if it has a negative year, but you do want to see how it works with the rest of the pairs in your portfolio. But this is a baseline test, and I know many of you guys, because there are a lot of new traders here on YouTube, the first thing you're probably drawn to is the far right, where you see that massive boost at about the 129th trade to the 233rd, where it just shoots straight up. Phew, boom, and you're like, yeah, that's excellent. However, if you're a seasoned vet, you're probably drawn to something else. When I took this to our traders on the Tier 1 platform, I said, look at this curve. Let me know what you think. And the first response I got wasn't, yo, look at that boost. It was, man, that drawdown though. That drawdown in the middle. And the drawdown is basically the period you can see around, you can see it's after it evens off at about 89 or 77, I should say, it goes all the way basically down to break even into the negative. That is called the drawdown, the period in which your system is not making profit. And that's the first thing that stood out to me, where it's like, hey, the overall result was good. So I know in a very general sense, again, this is a baseline test. There's no filters. There's very little qualifiers, just kind of the basic hypothesis. It works because it did end profit. However, there was a certain period of time that you can see where it did not perform well. And during that period of time, I kind of assumed so, right? And here's another thing. This is why we talk about, whenever we teach backtesting, we say backtest over multiple years. I want to backtest as long as I can. But earlier we talked about the market going through different conditions. I think we talked about it here. I just recorded a podcast before it, so it might have been in that podcast. But markets go through different conditions. They go through conditions where they're heavily trending. They go through conditions of there being, they consolidate, high volatility, low volatility, all that fun stuff. And depending on what your system is, it's probably going to perform different throughout different time periods. And it's important to kind of know how it performs. And there was a podcast I just recorded about a trader that was trying to trade 12 different strategies at once, but bounce from one strategy to another once market conditions change. So it was like, hey, when it's trending, I'm gonna put my counter trend system to the side and trade this trend trading system. But then when it consolidates, I'm gonna scrap the trend trading system and do the counter trend trading system. And my response was that sounds great in theory, right? The best of both worlds. Everyone wants that. Remember, 90% of traders fail. In reality, you don't know that a market is trending until it's already trending. You don't know that a market is consolidating until it's already consolidating. So by the time you switch to adapt to a new market condition, that market condition may be over, or you may be at the very end of it and you maybe get one good trade out of it, and then you get beat to death again when the market conditions change. And while you're getting beat to death with your other strategy, by the time you're missing opportunities with the counter trend strategy, and then you change and then the market goes back into trending, and the cycle repeats itself. So I'm not saying that you need to adjust different strategies. That's a topic for a different time. But I understand what the market conditions were during that drawdown. And with that knowledge of what the market conditions were, and my experience of being in the market for too damn long now, I know exactly kind of what I would need to do to adjust it. And understand, I'm not looking to get rid of all the drawdown. The drawdown is going to be natural. What I'm looking to do is limit the drawdown. There are a lot of trades in here that would have been very, very bad trades. They lost right away. You can tell the market conditions wouldn't work. But again, in this baseline test, you're not trying to optimize it. You're just trying to get a general profile of how the strategy performs. Then and this will be the next step, then you go and add in filters and qualifiers to see if you can kind of clean it up. And the key is you want to make sure those filters and qualifiers keep you out of some of those losses, but don't take away from too many of your wins. They are going to take some of the wins away, right? There's no perfect situation, but you want to make sure that the majority of your wins, especially your bigger ones, are still intact. And that's kind of the tricky part of doing it. But that's what my eyes were first drawn to. So I'm excited to start the next round. I took about a day off, maybe 2 days, just because I've been melting my brain here. 11 years is a lot of years doing testing and accumulating data, and I just want to approach it with a fresh perspective. So I want to take some time off away from the chart, so I'm not locked into the original test, and I have time to kind of think and really develop some ideas on what I want to do before I hop right back into it. But I'm super excited. Again, I have no idea if this is going to be something that works or not, but that's not the point of this video. The point of this video is to kind of walk you through the process, walk you through the mindset, and what I look for in developing a strategy, because that process is going to be the most important part. And again, I did this last year on a tier 1 platform and there was a massive response. So I figured, hey, why not bring it to YouTube as well? So, if you like this video, do me a favor, just hit that like button before you leave. Leave a comment at the bottom. Feel free to ask questions and whatnot as well. Again, it's very early in the process, so focused on the process and not the specifics, because those specifics are going to change throughout. But also subscribe to the channel. I don't know when the next video will be coming out. I do these randomly, so whenever I finish the next round of testing and I can draw some conclusions that are relevant enough to make a video out of, I'll share it with you, but make sure you subscribe. That way you do not miss it. Aside from that, I wish you guys a very happy new year if I don't see you before then. And until next time, plan your trade, trade your plan. Take care.